Oh, surprise, surprise, the bear's wrong again. Where's the crash? They told us we'd be crashing at the bottom with the tariffs. The market bottomed. We were told we were going to get a crash, and we rallied up 30% on the NASDAQ, just under 23.5% on the S&P 500. Exactly as I predicted would happen. I told you we were going to get the bottom with the tariffs and a massive rally. At some point, we're going to get a pullback. I've been talking about an extended wave 3 or pullback sooner rather than later. Then, over the weekend, Friday after the market closed, Moody's downgraded the U.S., stripping it of its AAA credit rating. A lot of the bears were saying, okay, here comes the crash now. Now we're going to get the Black Monday crash. Getting a positive close. Other bears were saying, now we're starting the next leg down of the bear market. What do? We close higher. And if you've been following along, I've been trolling the bears just a little bit with my thumbnails on my videos and talking about this Black Monday crash. Well, I was right. We would not get a Black Monday crash today. Why we would not get a Black Monday crash at the bottom when, again, we were told bears, we're about to get a crash. Bird was running around their hair and fine, saying, yeah, that's right. And I told you we were bottoming. Get a massive rally back up. That ended up being correct. The bears and the media have told us about the tariffs have been completely wrong. Everything I've told you has been 100% correct. Every prediction I've made about them. I get a pullback. Tell you the wave counts again. Could still be an extended wave 3, but we ended up closing positive. The Dow ended up 0.32% higher. The market totally shrugging off the Moody's downgrade. Now, we've already seen the downgrade by S&P back in 2011. We saw the Fitch downgrade in August of 2023. That might be the catalyst, and it still may be if we get a delayed reaction, but signals are still bullish. It's possible we get a bigger rally for if we have an extended wave 3 on our hands. At some point, we'll get a pullback, fake the bears out, and we'll get a higher low at some point, a larger pullback. We're going to explode higher. And maybe we go with the extended wave 3. Said we still may try to go to new highs. Same thing with Bitcoin. Bitcoin, it's looking like it's going to make new highs, and the market is following Bitcoin. S&P up 5 points. We were down. We're lower. We ended up gapping lower, and then we rebounded with the market. Ended with the positive close. We were pretty much flat, up 0.09%. The NASDAQ flat, up 4 points. The Russell down 0.42%. The VIX was up 5%. The VIX was up way above 10%. Lows of the session, it didn't close there. It actually ended up closing 5% higher. And we gapped lower, ended higher. Again, signal still bullish at this point on the S&P 500 here. Candle still blue. Line is still blue, the background's still green, so it's still bullish. And if we start to see momentum turn back down, then the correction can start. But right now, signals are still bullish. Signal's still bullish. Momentum line, still bullish. The blue line there. And if they could remain bullish, then we could get the extended wave 3. If we begin to see volatility, then I'll be watching. Push back down below the 200 period moving average and moving towards a gap. But right now, signals are still bullish. We'll see if momentum tries to turn. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. And I've been talking about the possibility of a divergence developing before any kind of meaningful pullback happens. A divergence developing on the awesome oscillator here, on the RSI in the daily time frame. Again, there's no red bar. We gapped lower. We ended up closing higher, getting off the Moody's downgrade, but you could still end up forming a divergence here. It may not play out that way, but it very well could if we have an extended wave 3 scenario that I've been talking about in each and every video. Whether we pull back, lower high sooner rather than later, or we try to go and get a higher high and pull back again, things have turned bullish in the weekly time frame. If we were to drop back down to the 10-week moving average, it wouldn't change things back to bearish. Bitcoin goes and makes a new high, the stock market very well could follow Bitcoin. Talking about that in this video. Same thing here with the NASDAQ weekly chart. We're above the 20-week moving average. Again, I talked about the possibility of that gap coming back down and coming back and filling that gap eventually. Could we make a new high? A lower high or a higher high, at some point you're going to get a pullback. Whether we get a fake out, breakout, fake, or whether we get a lower high and begin to pull back, needs to be seen. Signals remain bullish. Weekly chart here of the NASDAQ. Same thing. Again, we recovered. We ended up with a positive close. We gapped lower. We went higher. No red bar. You got the oscillator moving higher. Could it end up forming a divergence before we peak if we have an extended wave 3? Certainly possible. Eventually, this 20 is going to get back above the 200. You already got the 10 above it. They're both above the 50. The green line there is the 50. The 50 is curling back up. Eventually, a golden cross is coming. The rally that I predicted back at the bottom, I told you we were going to go to the 200, overthrow it, and blow right past it like Bitcoin did. About both of those scenarios. I told you down here we're going to the 200 and we may just overthrow it. The topping process in 2007, we blew right past it, pulled back to it. So again, very, very similar situation. Blown past these 200 period moving averages. I was just nailing it. But I want to show you my extended wave 3 count. And again, I've talked about those count. I'm going to draw it out and show you what I'm talking about. Again, that we have, rather than a 5-leg push completing right here now or very, very soon, that we just continue going higher and get an extended wave 3, that we have a 1, 2, this whole thing is an extended 3, then we go up 4 and 5, and maybe we push on up to a new high into this trend line right here. I think Bitcoin's going to do that, and maybe the stock market with the S&P and NASDAQ follow Bitcoin. I think it's going to go slam up into the December and the February high right here. You have the December, the January, and February high that form that divergence here on the RSI and the MACD. If we get the extended wave 3, and I've talked about this extended wave 3 down at the bottom, I told you, going back up to the 200 for a test. Remember back here when we got the Holloway candlestick? I told you that Friday on the 4th and then on the 7th we were bottoming. And then on the 8th again, we rallied up, it failed, and we were told, okay, here comes a crash. I told you we were bottoming. And then I told you before we ever got the rally, I was posting on, we got that 9.5% rally with this bar, the second best day in history for the S&P 500. And we were told we're going to crash. That was the launch of the tariffs, and it marked a bottom and the second best day in history. I told you that we were going to bottom with the tariffs. They were going to be paused or reduced or both. And it ended up they were paused and reduced at rate. Negotiations can happen. Everything the media told us and the bears told us was not going to happen has happened. Everything I've told you has happened. And that's why I was telling you that we are getting bottoming signals down here at major support. If you watched my weekend video, you saw the support levels at the 200-week moving average, horizontal support, the 50-month moving average. And these levels talked about, bouncing off of them is extremely bullish. I remain very, very bullish. But this is my bullish count right here. And I told you we were going back up to the 200. Over here, and I told you we could did back in 2007 and what Bitcoin has already done and blow right past the 200 period moving average if we get an extended wave 3, which is what I've been talking about. Now maybe just overthrowing it here and we get this wave 1, and I'll show you that count in a second. Here it is right here, that we have these 5 waves push higher and we're going to just get this pullback. This has been my main count. The other has been my alternative. Now I'm starting to think that, hey, maybe we get that extended wave 3. Bears told us we were going to have this crash at the bottom and we we're going to crash now. We're downgraded. Here it is. Here it comes. I keep telling you, we're going to go much, much higher. You get the blow off top. This is the fake out. People that never saw it coming. So there's not going to be a recession. We're going to have this soft landing. The market goes down, and then down here they tell us we're going to crash. Recession has already started when, again, we're going to go make new highs. We're going to get the recession, but you're going to get the blow off top first. This is the count there. We get the immediate pullback. Again, my signals still remain bullish. We have the bullish alignment. I told you we could get the pullback to the 50. It could be the 50 goes higher and gets closer to the 200 before we get a pullback. The extended wave 3, flipping back to that, again, set up a lower high, or like I said, you could come up to the trend line right here could get a massive inverse head and shoulders. I talked about the possibility if we stalled at the 200, a possible inverse head and shoulders here. If we just blow right past this area, then again, that extended wave 3 scenario very well could be in play. And again, we just blew right past that level and jumped above the 200 period moving average. So again, I think it's possible that we have the extended wave 3, that this just keeps going before we complete minor wave 1, which means that happens that we're going to go all that much higher as we pull back for a 2. Now, if we do that, you're going to hear all this talk about a double top pattern, double top pattern. And again, like I keep saying, we're going to get the sell-off. We're going to get a bear market. We're going to get a recession, but you're going to go make new highs first. This is not the crash to kick off the bear market. The Fed didn't panic down here. This is a corrective move. The bears needed an impulse move. They needed a 5-leg push down. They're not getting it. This powerful move back up would be a 5-leg structure if it's done, or an extended wave 3 for a 5-leg structure would be an impulse move. So again, I think that you've got a shot, rally continuing, and still, if this extended wave 3, as I talked about previously last week, if this extended wave 3 scenario plays out, you could end up getting a negative divergence before we get the wave 2 pullback. I talked about this possibility, the awesome oscillator, and here on the RSI. Now, again, I believe we're getting a 5-leg push higher, and again, whether it finishes with a lower high or right here now, or just a little bit higher, or whether we get a higher high and a breakout, which could be a head fake. You know, you come up here, we had a head fake over at the February top. We had a false breakout. We had a head fake in that we pushed above the January high, but there was no confirmation, no follow through to that, and we quickly turned back down. We saw the same thing with the NASDAQ trying to push back above the December high. The NASDAQ did not move to new high in January like the S&P, but we had false breakouts on both of them. And again, it could be, do it again. We come up to this trend line, right here, and we try to break to a new high, and it ends up failing, and we come back down. You see what I'm saying? Watching which of these scenarios plays out. Again, here I still have the leg push higher that finishes with the lower high, and then we pull back. But I want to continue point out that extended wave 3 is still very, very much in play. And again, if we pull back at a wave 2, then I think you'll get your extended wave 3, and then 4 and 5. And I think that this is going to take us into the summer or fall, to about August or September. Maybe it goes on longer. Maybe it goes on a little bit longer. We'll see what happens, but continue to remain bullish. Now is, do we pull back to the 50 period, the green line right here? Now that we've had the bullish alignment, the 10 and the 20 above the 50, the 20 is going to get above the 200 soon. Do we pull back sooner rather than later, or do we go up and get the other bullish scenario, then pull back, and that gets the 50, which is now curling up, closer and closer to that 200 period. Bitcoin looks like it might end up topping, getting the short-term top with the inverse head and shoulders head completing, and then we get the bigger pullback for the right shoulder. Bitcoin's doing the same exact thing. The market is following Bitcoin. It followed Bitcoin down. It's following Bitcoin back up. Bitcoin's just underneath the previous peak. It's likely going to push above it. Hey, if you want to see the inverse head and shoulders on Bitcoin and see my Bitcoin video that I made earlier today, I'll link it at the end of this one. You should probably look at it, because even if you're not into Bitcoin, you're not into cryptocurrency, the market is following Bitcoin. The inverse head and shoulder pattern measures into the mid 140,000 range, right around 144, 145,000 for Bitcoin. If we go higher, it could be closer to that 150,000 level I've been talking about. That's a low end of my target. That could be bullish for the stock market. Here's what I think is happening with Bitcoin, and you could see more detail in my video, but I think we're still going to go up to this trend line right here, and then I think we're going to pull back, and we're going to get this massive inverse head and shoulders. Could see something very, very similar. This is a December and the January high here for Bitcoin. We have a December, February high for the S&P. We have December, January, February high. They all follow Bitcoin down. Both of them follow Bitcoin down. They're now following Bitcoin back up. And if we come back up to this trend line, we could still see an extended wave 3 on the S&P 500, then the pullback for wave 2 for Bitcoin, and the pullback for wave 2 for the S&P and the NASDAQ. Massive inverse head and shoulders pattern to around the 145,000 area. Target is 150,000 to 175,000 for Bitcoin. Now, here's the S&P 500 daily. Here's the pattern I'm looking at. And again, maybe it doesn't play out. You got a good shot that it does. And even if we don't move to a new high, which again, we could get a false breakout and see that happen, maybe we get a neckline that is sloping lower. Maybe we come up here and it's sloping lower. It's slanting downward for the neckline rather than the neckline here sloping higher. Saying we could see something very similar to Bitcoin if the rally can continue, if we have a massive extended wave 3. S&P 500 daily chart here. If we had this pattern play out, if this pattern ends up setting up and our neckline high ends up being this peak right here, that these highs are pointing to the next high, the difference, that could be the 6,200 area or just overthrowing it. Our peak over here was 6,147. So if we go to the 6,200 area, just under it or just over it, if this pattern were to play out that way and we were to go to 6,200 to complete minor wave 1, pull back for minor wave 2, from the low to the high at this trend line right here, should we reach it, and no guarantee we reach it, but it very well could be in play, looking at 1,365 points. That's what this pattern would measure to. That would end up taking the S&P towards 7,500, just above 7,500, around 7,565, if that is the case. We don't have to reach the target, but we very well could. Major resistance, so around 6,800 on some of my trend lines. I talked about that over the weekend. And again, don't continue to rally up. If we sell off immediately, we could still have the pattern, but with a trend line that is sloping downward. Food for thought. I'll be watching right now is, do we get a lower high in the S&P and begin to pull back, or do we go get a higher high? And if we do, then this trend line is resistance. It's rising resistance. Now, same thing with the NASDAQ daily chart. If we can continue, you have an extended wave 3. You can come right up into this trend line of resistance. Again, here is the December high. January, we didn't move to a new high with the S&P or with the NASDAQ. We did in February, but we had a failed breakout. We came right up and couldn't clear. We popped above the December high, but we couldn't continue to clear it. And there was no confirmation, no follow through, and then we had the sell-off. Again, this move is corrective. The rally can continue. We gapped lower today. We rebounded back up 30, nearly 30% down here on the lows. Again, where I told you we were bottoming out, got the massive rally I predicted. We're going back to the 200, and we may overthrow it if we start going parabolic. And then we can pull back towards the 200, back towards the 50 as they get a golden cross if the rally can continue. So moved above the 78, a little hard to see here, but from this decline right here, this is the 78.6 Fibonacci. We've moved above it. That's a strong sign. Bitcoin did the same thing. About Bitcoin, because the market follows Bitcoin. But if we continue higher, you might just get a pullback. Wave 2, maybe it's a more shallow pullback like this. Maybe it's something deeper. But we'll be watching. Do we get this extended wave 3 scenario in this first minor wave, or do we pull back sooner and we just have the 1, 2, 3, 4, and 5, and now we pull back with a lower high? So we'll be watching which one of those scenarios plays out. Talk about the inverse head and shoulders, because I think Bitcoin's going to set it up. It sure looks that way. Bitcoin's now risen 44% since my indicators call the very day of the bottom for Bitcoin. And again, while I believe it's the pop higher that I've been calling for, following my Bitcoin videos, I think it will pull back, but I think it could go to a new high before it does. And if so, can the market follow? Now, I do want to say this, that if we pull back immediately or we go higher and pull back, I've drawn this shallow retracement. It very well could be we get a deeper Fibonacci retracement, but I'll be watching the gap right here we had from last week, because again, a chance we pull back and try to fill some gaps. Now, I don't know that we come all the way back down here. That would be a pretty deep retracement. May just do that later. But this gap right here, more recently from last week's gap higher on last Monday, is an important gap to be watching. So whether we fill that immediately and try to pull back or get the extended wave 3 and then come back. And this is an area that I would definitely be paying attention to, this gap from last week. Now the VIX tried to get back above the 50-period moving average. It failed here in the daily time frame. We got back above the lower band there, and then we stalled at that level, and our 10-period moving average continues to act as resistance over and over and over again. Ever since we broke it, it's been resistance, and even here we gravitated towards it. If we get the extended wave 3, then again, we're likely stay down here. If we completing minor wave 1 or about to complete it, then again, we'll need to get back above 10-period moving average and back above that 200-period. We have our 50 curling up. At some point, we're going to pull back towards it, get a corrective move. But again, it's just going to set up a higher low. Take out for the bears. It's going to, they're going to say, here comes the crash. Here comes the next leg down of the bear market. Get a higher low and then go. They'll finally throw in the towel when we get the extended wave 3, the explosive move higher. Very possible we buy more time and get that extended wave 3 that I've been talking about on the S&P 500. Count I have right here, again, is still showing that inverse head and shoulders on our 60-minute chart. This count is not the extended 3. This is the leg push showing that minor wave 1 is either concluding or about to come to a conclusion. But my counts, main count, the alternative count, both bullish. Again, the bottom is in. We've had the ABC corrective move. I think that, again, you've got a shot at a rising wedge, but if we get the extended wave 3, we could just blow right past this area and continue onward and upward to the trend line up here, 6,200, as I've said, in the daily time frame. You got a divergence right here, gave us a little bit of volatility. Does it amount to something bigger in completing minor wave 1? Maybe. This count could be invalidated if we end up getting an extended wave 3. I don't trade Elliott wave to try to validate or invalidate price fluctuations, price direction. You got the bears telling us, well, no, this is a 3-leg down, but it's wave A or wave W. And again, the problem with that is that it's still corrective. ABC, a larger ABC, or WXY, a complex corrective pattern, it's still corrective. To have a bear market, as I talked about over the weekend, you got to take out the 50-month moving average. You got to take out the 200-week moving average. We haven't done that. Bouncing off those levels is extremely bullish. So here's the count. Again, like I said, it could be an extended wave 3, but you've got a divergence going on here. Hey, look, we had a divergence right here. We had a divergence right here. We sold off with the GDP data, and then the market shrugged it off. Well, we sold off initially with the Moody's downgrade, and the market's so far trying to shrug it off, up going higher. Do we see something like that here and end up forming a larger divergence? You had a divergence develop. You had a divergence develop here, but then the market shrugged off the GDP negative number, and it still went higher before a bigger pullback to the 50-period moving average there. We got the golden cross here in the 60-minute time frame. So again, the two counts I'm paying attention to. You have a divergence. Maybe that plays out right here and now, sooner rather than later. We'll be watching. You got the same thing going on down here. If we pop higher, again, you could see a divergence develop right here in the more recent price action. Price is moving higher. We still have the MACD lower, but it didn't get a bullish cross. It still may and terminate it sooner rather than later. Bears told us we were going to next leg down to the bear market. This Black Monday crash, again, none of this stuff is happening. We'll have a possible rising wedge on our hands on the S&P and on the NASDAQ, so we'll be watching. If we blow past these levels, then again, the pattern gets canceled out, and you still got a shot at forming a divergence before the top is in with the RSI and the Awesome Oscillator. I think the S&P is eventually headed to this trend line in the monthly time frame. It is up close, and I think that will end up forming a massive divergence right here. This other peak and our peak here, I think that will end up forming a divergence as we go up and slam into that trend line. And then I think you're going to top there, depending on when we reach that trend line. S&P monthly here. Here it is in the weekly time frame, same channel, excluding the pandemic low, bottoming till in the monthly time frame. But this is where I think we're headed. Massive bottoming tail in the monthly time frame on the S&P. We're up 7% right now for this month, recovering all the losses of the previous month. Absolutely incredible. Just as my signals predicted would happen, a rally, a massive rally at the bottom, eventually going even higher to new all-time highs. It's coming. Now, I also have this channel on the S&P. I've talked about this. Again, this channel going back to the 2020 low. Again, we bounced off this trend line. That was where the 2022 and 2023 low were. And we bounced off of it in horizontal support from the 2022 high and our 200-week moving average. Also, the 50-month moving average that I've talked about at great length and detail. Again, whether we pull back with a lower high right here and now or very, very shortly, or go on and try to make a new high and then pull back, we'll see. But similar to the other longer term channel, this shorter term channel points up in this direction. So two trend lines I'm watching very closely. This channel here from the 2020 low, this parallel upper boundary, and the channel all the way back to the 2009 low, which actually called correctly that channel. I used that channel to call correctly the 2022 top as we slammed into it. So very, very interesting. This is our linear scaling. The other was our log scaling. I think we'll soon get a pullback, whether that's going to a new high and point back or a lower high. I think you're going to get this 5-leg push higher. Now, very similar to the IBIT ETF for Bitcoin, we have this rising wedge on the NASDAQ. They look very, very similar. And again, both of them could push up into the upper boundary here. This would be the scenario where we still get a lower high on NASDAQ and then pull back. Extended wave 3 scenario is still very, very much in play. Here we've had this divergence kind of take prices sideways so far. And again, it may not be done yet. So we'll be watching that. We were up 0.09% on the NASDAQ, up about 19 points for the session. Same thing, the MACD could firm up here, and we could get a divergence here in the most recent price action, even overthrow the upper boundary. We go way past it, then again, the extended wave 3 scenario comes into play and breaking to new highs with a head fake before pulling back. So one of those two scenarios is in play. This market rally stuff, again, I'm not buying it. Get it later, but this is clearly corrective to me. I'll stop major support on both the NASDAQ and the S&P 500. And is minor wave 1 coming to a conclusion here soon? We get the extended wave 3 scenario. I think one of those two scenarios is likely in play. Already went past the trend line, the broken trend line on the linear scaling. With the log scaling, we're coming right back up to it here, near it anyways. I'll be watching that level as well. Again, it's still possible we blow past that level and still go to new highs, but something we're paying attention to on the log scaling. Bullish MACD cross on the weekly chart for the NASDAQ and S&P here. So again, we're looking over the summer on into the fall, a larger divergence likely developing. That still has that rising wedge like the S&P 500. So again, do we see that breakdown pull back to the 50 in the cloud, or do we try to climb higher to the trend line, or towards it anyways, closer towards it, and end up getting another fake breakout, a head fake, like we did back over here at the February high. So again, just a level I'm watching. If we push above the upper boundary of the rising wedge, either get an overthrow move or, again, turn fails and we get the extended wave 3 scenario. Move this over here, you can see the cloud a little bit better again. If we pull back, I'm looking at the 50 in the cloud on NASDAQ and S&P 500. We go higher, still looking at this area as a level, but the 50 might be closer to the 200 by the time we pull back towards them. Actually, I think you're going to pull back towards them. In 2007, we blew past the 200, got back above it on the S&P 500, but then we pulled back to 200 period as the 50 back then was still above the 200. It never got a death cross back then. But here we could pull back to the 200 as we're seeing the 50 rise towards the 200 period. Will eventually be a golden cross. Same thing with NASDAQ with their bottoming tail at the 50-month moving average and the trend line right here. We bounced right off that trend line just above it. Could be heading up to this upper channel before all is said and done with a massive blow off top move. Especially if we have that inverse head and shoulders pattern setting up. If that sets up, again, we could see an explosive move higher. No climax rally with the blow off top.